Welcome back to another episode of Propelio Academy. This is Troy Fullwood with Pinnacle Investments. And this episode, I want to talk to you guys about what it is that you need when you're wholesaling a note deal, or for all intents and purposes, buying a note deal. And this is what I call our magic list. And our magic list is only technically brought out after we come to an agreement with a seller. So last episode, I talked about gathering the information. You'd send that over to somebody like myself. I'd price it out. I'd send it back to you. You'd take your fee off of it. And then we would go into gathering the information with the seller. That being said, here's the information list that we're going to need. And I would send this over to the seller in the form of an email. Hey, Mr. Smith, please gather this information for me. Send it over to me as soon as possible so we can get your file into due diligence and moving forward. Number one thing, we need what's called a note purchase information sheet. So I'm going to go ahead and jump over here real quick. We need a note purchase information sheet. Now, you may be asking, what's a note purchase information sheet? No problem. This is it. Note purchase information sheet is you want to gather all of the information onto one document. Okay? Now, some of you guys out there are real techie and you do things very techie wise and all that. And I get that. Don't get me wrong. We have a tech side to our entire business as well. But what I've found that works really well, especially in the beginning stages when you're gathering information from somebody, is to, AKA, write it down. Go an old school method here. Just pen and paper. Simple stuff. I do seller information. I can populate this for them, or I can have them fill it out. What I'll typically do is I'll send this over to them along with our note stacking list, which I just had up a moment ago, and I'll ask them to complete all this information and get it back to me. Okay? Borrower information. I want to know who the borrower is. Yeah, I know it might be on the note and all that other kind of fun stuff, but I want to know who the borrower is and what their phone number is. I want to know if their subject property address is the same as their mailing address. Some borrowers send stuff to a P.O. box. Some properties are non-owner occupied, so you want to make sure that those match up. Closing agent, title company. Who did they close this deal through the first time they closed it? What was the name of the title company? Because for all intents and purposes, we want to go right back to that title company, give them some more business, because number one, they're familiar with the file. Number two, they can pull the old file out of storage within a couple of days. And three, refamiliarize themselves with it. And number four, hey, who doesn't like repeat business? Okay, so closing agent / title company or attorney. Why do I put attorney in there? You don't need an attorney when you're buying a note. All you need is a title company to work with, to close at. But some states require an attorney, like New York. So if it's a state that requires an attorney, you're going to have to get an attorney, but you may not necessarily need a title company. The attorney will work with the title company to get you the information you need, as well as, even though the title company closed the deal the first time around, they may not have paid for a lender's policy or an owner's policy. Both sides might have said, you know what, we're good. We don't want any of that stuff, which I think is kind of odd, but I've seen it happen more times than not. So at the end of the day, you're going to need a lender's title policy. Title company is going to do that, or the attorney will do that for you or facilitate that on your behalf. Like I said, this is a very hands-off business. This is why I love this business. It's simply about delegating things to other people, keeping the ball in play, and moving on with my life to go on to the next deal. That's what I love about wholesaling deals as well as buying deals, because the same model applies to that, only it's a little more due diligence on my part. Property taxing authority. What county is it in? Who's the property taxing authority? Their address, their contact. Now, the seller may not know that, but maybe the title company does, or the seller doesn't know it. It comes back blank, so you know you got to fill it in. Hazard insurance company. Who is the property insurance company on this property? Because we're going to need to know that information so that when we send over a change on the mortgagee clause on the title policy, we're going to need to know who to contact and how they want it done. Okay, because each property insurance company tends to be the same, but sometimes a little different. Consultant / broker information. This is where your information would go into play. Okay, if you're sending over a file to me to buy, this is what I would want filled out for my purpose, so we can upload it into our system and I want to know all of your contact information so we can communicate with you properly and effectively at all stages of the process. Now, that being said, that is your note purchase information sheet. Next thing would be a 1003. Okay. Now, some of these things the seller is not going to have. Okay. Some of them they might if they used an RMLO and things like that. But RMLOs really just kind of came on the scene over like the last, really strongly over like the last 3 to 4 years. Prior to that, they were kind of a, how do you say, a well-kept secret, and were not necessarily used as a whole. So therefore, you're going to end up with, if you're buying an older note deal or even some newer note deals that aren't using RMLOs, you're going to get kind of a hodgepodge of information. That's not a deal killer by any stretch of the imagination. What we're looking for is we're looking to gather as much information as humanly possible that the seller has readily available to them today. That way we can start wrapping our arms around the deal, we can start getting a great understanding about the deal, and we can basically catch up to where they're at in the deal. Keep in mind, these are being done from thousands of miles away in different parts of the country, in different economies, on different styled homes, day in and day out. So because I don't live there and you don't live there, oftentimes we're relying on this documentation to bring us up to speed. So, note purchase information sheet, 1003, credit report. Ideally, they would have a credit report. If they don't, can they provide us a credit report? If not, we'll pull our own. Okay? We'll pull our own. Now, I want to touch on this real quick because I kind of skipped over it in the last session. But if the seller says, hey, you know what, I never got a Social Security number on these borrowers, then that's not the first time that's happened, and it probably won't be the last. They need to go back to the borrower and get that information. Now, how do they get that information? Well, really simply. They go back to the borrower and gather that information from them by saying, hey, Mr. Smith, or whoever the borrower is, I was auditing your file. I noticed I didn't have your Social Security number. I need your Social Security number so I can do the year-end interest statements to you and your wife so that you guys can use those on your tax returns. Year-end interest statements on home ownership is typically one of the single largest line item deductions on a person's tax return. If they're not taking advantage of that, then they're leaving money on the table and could potentially be paying taxes in a situation where they don't need to pay taxes or give the government any more money than they've already given them. So it's critical that, number one, that's being done. But if they don't have a Social Security number on the borrower, that tells you right then and there that they're not doing it, which, to be frankly honest with you, is a violation of IRS tax code, and they could potentially get in a lot of trouble. Now, I'm not going to go off on a tangent and talk legalistically about those things. I want to get their Social Security number so we can pull credit, so we understand the quality of the borrower. But getting the Social Security number, they should be getting it and then issuing those year-end interest statements. Okay? Now, keep in mind that even after somebody's filed their taxes, if they were to issue those to them, they could go back and refile taxes and potentially get a refund very easily. Okay? I'll let them deal with that in their accountant. That's not what I'm here for. Real estate contract, or let me back up here. Hazard insurance. So you want a copy of the hazard insurance binder or policy. Okay? Ideally, it would be a policy. If it's been in effect for typically 30 days or more, it would be a policy. Which will also have all of the, how do you say, agent's contact information on, the company's contact information on as well. Real estate contract. Did they put together a real estate contract? Sometimes they do, sometimes they don't. If they did, we want a copy of it. Pay history. Okay, now this is a wild horse right here. Pay history. In a perfect world, they would have hired a third-party servicing entity to service the note. And there's a lot of great ones out there. I prefer Note Servicing Center. Go to noteservicingcenter.com. They're out of California. They do an amazing job. So you can use that for your notes, or you can use that as a recommendation for other people's notes, but they do a great job. Here's the point in that. If they've used a third-party servicing center, it's like a 2-minute process. They go to their portal, they check their files, they click on the link that has that particular file in there. It shows the pay history. They push print, or they screen copy, put it into a document. Now all of a sudden they can email that to you, me, or anybody else. That's in a perfect world. In what I call the real world, oftentimes they're not using third-party servicers. They're trying to do it themselves. That becomes very messy in the sense that now they've got to go back and collect 24 months, at minimum 12, if it's 12 months or older on the note, but at least minimum 12, ideally 24 months worth of payments. Now, if they've changed bank accounts, savings accounts, money market accounts, that's going to add an additional challenge to them. If they didn't photocopy the check, they're going to have to go back to bank statements. They're going to have to circle that particular payment. They're going to have to do January through December of each year that we're asking for. And we need that to make sure that they're selling us a performing note. Now, most note sellers who have, what I would say, collected payments on their own, done their own note servicing, oftentimes they're just taking the cash and shoving it in their pocket, or they're going through the drive-through teller at the bank and they're cashing the check and they're just moving on, or they're putting the check in their bank account and they're moving on, and they're not thinking twice about saving the envelope, which has a time date stamp on it. They're not photocopying the check. So they're not thinking about these things, because why would they? They've never had to do that before when they deposited a check. Now, why would this be any different? So it's very innocent behavior. But keep in mind, somebody's asking you or me to write a $68,000 check. We want to make sure that that borrower has been making their payments on time for the last 12 to 24 months before we write that check. This is the only way it can be done if they're not using third party. You've got to give us bank statements, savings account statements, money market statements, whatever it is, wherever they put the money, we need to verify that. So that can be very taxing and very cumbersome, which is why I'm a big proponent of using third-party servicing companies to service these notes, because oftentimes they're $10, $12 a month. That cost can even be written into the note so that the homeowner or the home buyer pays that on top of their payment, and those kinds of things, okay? Copy of the note, okay? We need to also make sure that they have the original note in their possession. Yeah, hey, send me a copy. You keep the original, but make sure that you have the original. Make sure that they have the original, because we're going to need that in the end when we go to closing. Mortgage or deed of trust. We need a copy of that. Warranty deed. Okay, we need a copy of that as well. Good faith estimate. We need a copy of that if they did one. Sometimes they do, sometimes they don't. Truth in lending statement. We need a copy of that. HUD closing statement. We need a copy of that. We need it signed. Keep in mind, all of these documents are signed documents. I don't want to see the pre-closing documents. I want to see the signed documents. And the only reason I say that is I've had a number of people over the years send me unsigned documents, which does absolutely nothing for me or for you. And now they got to go back to their files and pull out the signed documents. Why they would do it that way, I've never asked the question, but I've seen it happen more than once. HUD closing statement, signed by both parties, okay? Title information. Now, this is that point in time where you get to delegate who gets to do what, when, where, and how. The top portion is definitely the responsibility of the seller. This middle portion, title information, that can be the seller, or it can be you, or it can be the buyer. We're looking for a title commitment from them. Hey, if they have a lender's title policy on this particular deal that you're buying, we don't need a title commitment. We just need a nothing further letter, or what they call a bring to date commitment, which is nothing more than them going back to the date of the sale and seeing if anything's happened on that property title-wise over that 24 months, and they give you a copy of it and certify it, nothing further. in the form of a nothing further letter saying, hey, title's still what it was 2 years ago. Nothing's changed. Title company invoice, what it costs to do it, property tax certificates. We want to know that the taxes are up to date. Hey, if the taxes haven't been paid on this house for the last 2 years, the note seller is going to ultimately end up having to pay those taxes out of their proceeds. Okay? So that's kind of a byproduct of them not staying on top of it and making sure that that homeowner is making their payments. We don't want to buy a deal where the taxes are behind and now we're scrambling to get them paid, and then we're scrambling to get the money out of the property owner or the home buyer. Okay? Appraisal BPO information. This is put in there only asking the question, hey, do you have a recent appraisal or BPO? Or do you have an original appraisal or BPO? Now I know it says no older than 60 days. That's more of an internal message to our office that if it is over 60 days, we still need to order a new one, which our rule of thumb is we're going to order a new valuation on every property or every note that we buy, period, end of discussion. So, but if they've got something from their files, we'd like to take a look at it. Once again, it brings us up to speed. We get to hear third-party insight to what that deal was even 2 years ago, and we can compare it to numbers today. We don't get the luxury of actually seeing the property firsthand. Neither do you in most cases. So we're relying on third-party vendors to help us paint that picture and get that understanding and catch up. Seller information. If the seller is selling the note and the note holder, meaning the lender on the note, was a corporation, meaning ABC LLC 123, then we need to have a copy of their corporate resolution, okay, and articles of incorporation, okay? So that's only if the corporation is the seller of the note or the seller of the property and resides as the lender on the note. That way we can make sure that whoever's involved, it might be a single member LLC, it might be a partnership, it might be a number of different things. None of that really matters. We just want to find out who, we want to know what that information is and who we're doing business with. Okay. And that's usually not a problem. We have no problem ever getting those things. So that's your starting point. That's your roadmap. That's your, let's start here type of a information gathering. And then we take that information, we put it into due diligence, and then due diligence orders up value. They order up title searches. They then start reviewing all the information, make sure that legal descriptions are correct, terms are correct, the unpaid principal balance is correct, it's amortized out correctly, payments have been applied correctly. If there are any, advance payments or principal reduction payments, that those have been addressed, that everything is spot on, because, hey, if they've paid down on their mortgage and we're using a number that's bigger and it actually should be less, then we're actually overpaying for that note. And this is all part of the due diligence process in this. The great thing about this is you can do this nationwide. You can do it all over the country. As I mentioned to you, we've got a deal. I'm in Arizona. We have a deal that involves New York and Florida, and that's going on right now as a whole. So some pretty cool stuff there. One real quick thing, and then I'm going to wrap up this session. By the way, if any of you have enjoyed, obviously you guys are listening to this, you're enjoying this. Thank you so much for sticking with us through this last series of videos. But if you want to grab a copy of our book, okay. So thank you so much for that. Let me count this out. 1, 2, 3. So thank you so much for spending time with me today. As I said, this is your, roadmap for gathering that information. And this puts everybody on the same page. It puts everybody on the same page very quickly. It gives everybody a point of reference. So if something is missing, you can go back and get it. If the seller doesn't have it, it's not a deal killer by any stretch of the imagination. We just need to know what's missing so we understand what we're buying as a whole. But this ultimately communicates the same message to everybody involved and gives you a chance to gather the information, gives you a chance to communicate effectively with your seller as a whole, and it helps us to gather the information as well. So with that being said, thank you guys so much for spending this time with me, and enjoyed this day recording these for you guys. We'll see you guys on the next episode here at the Papaleo Academy. Take care.